Hi everyone and welcome to Newbie Wednesday. So I'm going to start with a bold claim here. 20% of the people in the financial markets make 80% of the money. Are you a member of the 20%? If not, would you like to join the top 20% or even the top 10%? Well, in the next couple of minutes, I'm going to give you some ideas that will help you become probably some of the highest earning traders in this industry. Now, would that be a good goal for our time here together? I'm sure it is. So, I'm going to get into this right away. Today, since it is the first Newbie Wednesday session of PipsMatter.com, I'm going to be speaking about goals and the importance of them. Goals are essential towards living. And if I hear about your goals, I will understand your principles. And principles are what make life and make us. Principles make companies grow. Principles make traders grow. So let's call these 23 trading rules principles of trading. So the aim and objective of every single trader who enters the financial markets is to make money. I've said this before and I'll say it many times. It is also a very known fact that a very large percentage of traders lose in the financial markets. Now, there are many reasons for their losses, and one of the most important is that they do not know how to select the right assets to buy and sell at the right time. So this is very important, and I'm going to be teaching you all about this throughout Newbie Wednesdays, and hopefully I'll make excellent traders out of you. I expect that today I'm going to give you rules, provable and practical, which will help you, the traders, to study and learn how to select proper assets to buy and sell with minimum risk. This is very important to me. Lowering your risks is essential towards successful trading. In our recent live trading workshop, I gave a very good idea of how to actually trade by minimizing risks. And I'm going to go over that later on, but for now I'm going to continue. The main objective with the Newbie Wednesday webinars is to give basically the investors and traders the benefit of 8 or pretty much more years of our experience. This experience has been very valuable to me, and if you will profit from this experience, it will also prove valuable to you. In this life, we must have some kind of definite aim to achieve happiness. Money will not bring all of it. Neither can we always help others with money alone. At least that's what I believe. The best way I know of helping others is to show them how to help themselves. That idea of the Chinese saying, teach a man to fish, give a man a fish and you'll feed him for a day, or teach a man to fish and you'll feed him for a lifetime. So the best way I know how to help others is to show them how to help themselves. Therefore, knowledge and understanding properly given to others is the greatest good that we can do for them, and at the same time, of course, do for ourselves. I've personally trained thousands of people, and thousands of people have virtually gone through my trainings. A very large percentage of these people still thank me to this day, and I'm very honored for that, and I'm going to give them 110% more, because right now I'm back and I'm much stronger and much better. I've taken my sickness to basically make me much stronger. Now, I believe that PipsMatter will give you more knowledge and will bring you more happiness throughout money gained, of course, than any other firm that works in this line of business. If it doesn't, well, I'm to blame, and if it does, I will be well repaid for my labor here today, for my labor yesterday, and for all the tomorrows to come. So, welcome to Newbie Wednesdays. Today's session will give you the essential skeleton of investing in trading before you even begin thinking of trading for yourself. I'm actually talking about rules. Just like the laws of the universe, which we follow as a religion at PipsMatter, the rules, the 23 never-failing trading rules, will set the pace for your trading success. So, first I'm going to go over the special offer that I actually spoke about in the previous session. It is a 2-week free access to all PipsMatter premium services. Now, these services include all trading workshops, all live trading events, personal live coaching, And what you get with that is something actually special, and we're going to write more about this on the website. It's actually called, the name's still not 100%, but tomorrow it will be. So what you're going to receive with this is basically the ability to ask us to give you a complete trading analysis of your favorite trading pairs. Let me give you an example. You like to trade gold, you like to trade the majors. You basically ask our team to provide you this analysis. What we do is we provide you a short, medium, and long-term analysis on all of those pairs. We give you our ideas where the pair can go, what major resistances, support it might find on its way, all the major events that are happening in the short, medium, and long term. And basically, we will clearly identify trade setups for you. So there's no better way to actually pop into the market and trade than taking guidance from professionals. The second thing is you're going to be in the loop for high impact trades, anything to do with high impact events, breakouts, changes in trends, wars, anything. And the final thing is a comprehensive risk management analysis of your full portfolio. Let's say you have $1,000 in the market. We'll teach you exactly how to manage those funds safely. Second, if you have trading activity in the market, we will review your account and find out exactly what mistakes you are making. I hope I'm explaining this well. It's a really good thing to do, and it's free, so take it. Now, the rules that I state here are my trading rules. In order to achieve success in the financial markets, the trader, you, must have definite rules that are a part of you as much as your name is. You need to follow rules. These are your trading rules. Find which ones you like, take them. If you like them all, take them all. The more, the better. The rules that were stated here are based on my personal experience that I have learned from my mentor and from the many years of my trading experience in the financial markets. And I promise you that anyone who follows these rules will achieve success, but you must follow them. The first one is amount of capital to use. This is very important. If you put your capital into percentages as of 1 to 100%, you never add more than 1% of your capital or 2%, let's say, on any given trade. I've given this example out many times, but I'm going to do it again. Let's say if you're risking 5% of your capital, all you have to do is lose 5 trades to be down a quarter of your account. And I couldn't think of a stupider thing to do than be down 25%. Here's the idea. When you make money trading, your amount that you can always risk is only 100%. Okay? You can never risk more than 100%. If you win 5, you can win 5,000%, but you can only lose 100. So you need to take care of that 100 as like it's everything in the world. Okay? So it's a very simple example. 5%. If you lose 5 trades, just 5 trades in a row, that's very easy to do. You're going to be down 25%. But if you just risk 1% or 2%, let's say, if you're risking 2%, you're only going to be down 10%, which is still much better and much easier to manage. And believe me, I can easily make 10% back. You can too. But 25%, well, that's when you're in trouble. So before you risk more, you need to, basically before you start risking more than 1 or 2%, you need to earn the right to be risky. By that I mean you need lots of experience and you need to understand what real, strong, powerful setups are. Think of it this way. If you don't open a trade, you can't make money. But if you lose all of your money, you can't open a trade. So basically, you need to trade, but you need to trade small because you can't lose what you've got. Otherwise, you're in big trouble. Point number 2, or rule number 2, always use a stop loss. Always protect your trade as soon as it is open. Do not move your stop loss, ever. A majority of the losses of traders that I've seen suffer, the losses that I've seen them suffer are because either they do not use a stop loss or they move it and hope that the trade will reverse. Don't be a trading clown. You're not in a circus. You're in the biggest financial markets in the world. And there are no hopes or tricks here. No tricks up your sleeve, no rabbits out of your hat. And believe me, it's not a church. There is no hope here. Just facts, risk management, and trading rules and proper trading systems. I'm going to steam through these ones. Point number 3, Never overtrade. This would violate rule number 1, your capital rule. Point number 4, rule number 4. Never let a profit turn into a loss. This means after you have a profit of, let's say, 15, 20 pips, what you should do is raise your stop loss into profit, or simply add a trading stop to it, so that you can actually have no loss of capital, or in better words, a win-win situation. This is ideal for beginners, and this is one of the best ways you can protect your capital as much as possible and steadily grow your account. Rule number 5, never buck a trend. Never trade against the trend. Never. Never buy or sell if you're not sure of the direction of the actual trade. Do your research, read your charts, then open your trades. Moving on to number 6. Do not buck a trend. I just went over it. Point number 6, when in doubt, get out, and stay out when in doubt. That means don't trade when you're uncertain. Rule number 7, trade only in active markets. Keep out of slow ones because there's no money there and there's far too much risk. Rule number 8 is equal distribution of risk is essential. You need to trade in a few different and not correlated markets. Now, what I mean by this is a little strategy that I explained before. And this is a very good way if you know how to compound properly, and we're going to do this in other sessions, or you can request a private session and we will teach you privately how to do this. So, basically, let's say you take a 2% risk. You break it down into 4 different trades. 1 in forex, 1 in commodities, 1 in shares, and 1 in indices. 0.5% risk on all of these trades. They can all be on forex or commodities or regardless, but they should not be correlated. So you open 4 different trades with a 2% risk, all equaling 0.05 times 4 is 2%. Open that trade, open those kind of trades, and as soon as one of those trades goes into profit, you start compounding it and it covers the other 3 losses, if you do have 3 losses. We're going to point number 9. Never limit your orders. What I mean by this is do not use trade pending orders. It's always better to trade the market live. You feel it more and you understand it better. And you don't run the risk of a trade opening while you're not at your computer. Point number 10. Rule number 10. Do not close your trades without a good reason. Follow up with a stop loss and protect your profits and limit your losses. Rule number 11. Accumulate a surplus. This is very important. After you make a series of successful trades, the best thing to do is put your or some money into a security account, your second account. And this account is only used in times of emergency or panic or of great opportunity. So what this means is, let's say you invest $500. You turn that 500 into 1,000. The best scenario is take out 500, transfer it to a new account, leave that account on the side, or withdraw it and put it in your bank account, but I would not advise that. I would advise you to actually use it as investments. So we're going into rule number 12. Never trade just to be in the market. A successful trader is a patient one. This means that if you want to be successful, you need to learn patience. Really, you need to learn patience. It's definitely a virtue in this market. Let's go to number 13. Never add on to a losing trade. This is one of the worst mistakes a trader can make, especially if you're not good at risk management or you have bad habits of gambling. Use this rule as if you use your name when you introduce yourself to someone. Rule number 14. Never get out of the market just because you lost patience or get in because you're anxious from waiting. Rule number 15. And this is one of the biggest rules I've seen people lose money. Avoid taking small profits and big losses. Like I said, this is one of the major reasons people lose money in this industry. I've seen people have a 94% win ratio and still bust out their accounts. That is sick. That is insane. I don't understand how somebody can do this. Okay, rule number 16. Never cancel a stop loss after it's put. We're going down to 17. Avoid getting in and out of the market often. That means relax. Don't be too active. My favorite, be just as willing to sell short as you are to buy long. Let the objective be to stay with the trend and make money. Forget about your instinct. Your instinct has no room here. Okay, we're coming to the final rules. Rule number 19. Never buy just because the price of an asset is low, or sell just because the price of an asset is high. Rule number 20. Be careful of opening trades at the wrong time. Wait until the asset is very active and has crossed resistances before actually buying or selling until it's broken actual supports. Rule number 21. This actually happens a lot when people get comfortable. I've seen many traders believe that they're excellent at trading and they start thinking that they can hedge. Hedging is a very dangerous game. If you are long on a pair and it starts going down, don't sell short just to hedge it and try and make some extra money. Get out of the market, take the loss, and wait for another opportunity. Rule number 22. Never change your position in the market without a good reason. When you make a trade, let it be for some kind of good reason or according to a definite entry plan, which we will obviously provide you. Then do not get out without a definite indication of a change in trend if you're in the market. And the final rule, avoid increasing your trading activity after a long period of success or a long period of profitable trades. The idea is this: you need to just chill out. You need to be happy. You need to have weekly, monthly, and quarterly goals. And yearly, absolutely. And they all have to be connected, one way or another. These rules need to be connected. And goals need to be connected. Now, when you decide to take a trade, be sure that you're not violating one of these 23 rules, which are vital and, believe me, very important towards your success. When you close a trade with a loss, just simply go over the rules and see which rule you violated. And basically then make a commitment to yourself never to make that mistake the second time. Because if you make it the second or third time, it's a choice, my friend. It's not a mistake. Experience and investigation will convince you of the value of these rules. Just experience them and I promise you, you will see tons of value in them. Observation and study will lead you to a correct and practical theory for success in the financial markets. Your first thought must be how to protect your capital. And these rules help you with that. You must make trading as safe as possible. That's the idea. You need to make trading very, very safe. If it's not safe, it's fucking risky, and you don't want that. There is one sure and safe rule, and I promise you, any of you who follow it and never deviate from it will always keep your money in your pockets, and you'll come out ahead of the markets every single year. The rule is the first rule I stated. Divide your capital. Break it down to 100% and never risk more than 1 or 2% of your balance. The idea is very simple. If you start with $1,000, you should not risk more than $10 or $20 on your first trade. And the way to limit your losses is to use rule number 2, and that's use a stop loss. You can always find new opportunities to make profits, just as long as you have capital to operate with. That's what many people forget. You can always find opportunities to make new profits, just as long as you have capital to use. Taking heavy risks in the beginning, believe me, puts your capital in a lot of danger and destroys your judgment. Guys, I've seen people lose $25,000 on a trade. You need to trade in such a way that you will not be disturbed mentally by losses. If and when those losses come, you're going to manage them. Now, I fully recommend when you go live or if you're trading live to keep your risk per trade between 0.5 and 1%. This will be ideal, and when we trade together in any of the live trading events, we will always follow our risk management rules. This is very important. I just want to mention something of importance as well. On Friday at 5 p.m. plus free GMT, we will be hosting a workshop on candlestick analysis. This is very important, and it's a part of our trading system, System 23. This is very important. This is a very important ingredient of the system, and it helps us find tops and bottoms very easily. Make sure you're there. It's going to be awesome. It's going to be real good. So, does anybody have any questions for me? Well, if you do not have any questions, I'm going to be cutting this one to these 20 minutes. The reason is because I want the rules to sink in. The rules will be posted in the forum on our website under System 23. That thread will be coming out soon. So all you have to do is simply go to PipsMatter.com, click login or register, and once you're in, you simply press PipsMatter forum. Once you're there, you'll see it. It's going to be up in about 15-20 minutes. Okay, everyone, thank you for coming. I wish you a good morning, good day, and good evening, regardless of where you are. Stay safe in the markets, and happy trading. Bye.